Darn it. Fuck. Hey, TikTok, Jim Malone here, coming to you live. I'm also live on Periscope and on YouTube. So if you want to see the charts that I have for this afternoon, just go over to PSCP TV. Dallas Trading Floor. So pscp.tv/Dallas Trading Floor to see me live on Periscope. And so it's the 7th of May, and a very interesting day as usual. The market is up tremendously. And it's an interesting time. That's all I can say. It's an interesting time. We are in a upward momentum here, which is really interesting. We're seeing that the market is moving forward, and a trade that I recommended yesterday, PayPal, has worked out better than I absolutely anticipated. So it's it's a really interesting time. So just wanted to connect with everybody and kind of give you a rundown. If you want to see the charts and see some of my sample, it seems as if the market is a tale of two markets. On the one hand, you have the NASDAQ. That's where Microsoft and PayPal and Facebook all are. And then on the other hand, you have the S&P 500, which includes a lot of oil companies that aren't doing so well. So it's really interesting. You're seeing the money move into the big tech stocks, the tech stocks that are big, that have a lot of capitalization. I guess it's it is the stay-at-home economy. I mean, that's really all you can get from this. But what I wanted to show you in here on this chart is basically how it's moved above the 40-day moving average. And then it did retrace a little bit here, but it's coming right back up, and it seems to want to go to about 300, a little bit above 290. Right now it's 289.33, and that seems to be the number that that's significant here. So very interesting chart. Um, very interesting chart. It's definitely, making new highs. So I don't know if if the retracement is back, is back from the dead. I don't know, but it certainly seems to be wanting to move higher, which is amazing because I think some of the numbers we're going to get here shortly with the unemployment, unfortunately, are just going to be horrendous. But we are opening back up. As a matter of fact, I don't know if you saw it on the news, but at least here in Texas, there was a salon owner that opened up and they threw her in jail. Can you believe that? But supposedly everything here in Texas is supposed to be open by Friday. So, it's hopefully, there's a lot of anticipation, I think, in this, the way it's coming. I just want to show you this amazing chart for PayPal. PayPal is broken out. I mean, I can't hardly believe it because, I bought it at 127 yesterday. Yesterday, I bought it at 127. If you can believe that. I then protected myself by selling a covered call, basically expiring on the 15th of May, which is basically a little over a week from now. It's Friday of next week. Thinking that I had done very, very well to get $3.49 for that call, which translates into a very good return for basically a 9-day trade. But guess what? It gapped up. So I'll be happy to sell it, but I'm going to be selling it 130. So there's a lot of gain that I didn't pick up there, but I did well. But it's kind of thing where it's just absolutely amazing. I put together a trade that you might want to consider on PayPal because it looks like it's just going crazy. They reported their numbers and they had their absolute most traffic of all time this first quarter, and it's just absolutely amazing. PayPal is probably going to make new highs, as you can see. I mean, look at this chart. It's amazing. This is the 40-day moving average here. This line, this red line, and it moves right above it, which is normal. But this is the gap up after earnings. So this is very, very bullish. And here I was. I mean, last week, in the beginning of the week, I was like, well, let's get all in cash because I can't figure out the direction of the market. But it's just amazing. It's just amazing. So hey, I got the gap up, and that's kind of a cool thing when that happens. I also want to show you Microsoft. Now, the buy point on Microsoft, and just for sake of full disclosure, I started buying Microsoft on Monday, and I've accumulated a few hundred shares, not thinking it was going to do what it did, but it's moved nicely. It's moved very nicely. Now, the buy point on Microsoft, I just want to put this out there. The buy point on Microsoft is 180.10, so it's a little bit above its buy point. Now, you can buy a stock if it's in the buy range. And what do I mean by the buy range? Well, the buy range is going to be the buy point, which is 180.10 on Microsoft, up about 5%. So we're looking at, it's really comfortable to buy it in that range of the buy point plus 5%. That's where you want to be buying it. So definitely is right now, Microsoft is in the buy zone, and I've been accumulating this stock, and again, just to protect the downside, I've been selling options against it, and they're all look like they're trading very nicely. So it's really unique. I mean, it's really interesting. And also, let's see if we have the next slide up here. Well, goodness, these are the relative strengths at new highs, and I just kind of want to put it out there for everybody, kind of what stocks we're talking about. There was an incredible gap up on a pharma stock. I don't know much about it. $7.70 with huge potential here. Now it's called the symbol on it is QDEL, QDEL, and they make home testing kits, and I think they're making them for the for the coronavirus. I believe that's why it's up. So let's see. I've got a question here. Hopefully I can pull that up on the screen. Yeah. Bought PayPal and nice. Okay. This is one of my favorite people here. Thanks for coming back and taking a look again, Earl. So appreciate it. Let's see if that'll come up on the screen. Says you bought. Yeah, there you go. You bought PayPal and covered, sold a leg and kept the call, sold both and cleared 1,500. Right on. That is a great trade. That is a friggin' great trade. Nice. I want everybody to kind of look at that out there, because this is a trade that I got lucky that it recommended it yesterday. And I mean, I was in the trade myself, but I'm so glad that somebody took advantage of that and made $1,500. I mean, that's what you can do in a market that's moving like this. So that's very, very exciting. I really think that's awesome. So let's see now for Facebook. Let's see if I've got any questions that I could answer. Now these won't appear on the screen. Well, I could probably write them actually. So let's see. Did the stream just try? Yeah, it just did. By the way, the stream is going right now on YouTube, and it's on YouTube, and so just type in youtube.com/Dallas Trading Floor. And by the way, if you look at my profile on TikTok, it's got a button. You just push it, and you should be good to go. So that's awesome. I think that's killer. Um, so and you had PayPal. That's awesome. You had PayPal into the earnings. Nice. I couldn't believe PayPal. I mean, I put it up there. I thought, well, yeah, it's going to do good, but I didn't expect it to gap up. I mean, I knew that it was good. I knew it was gaining on Visa and MasterCard. By the way, PayPal is a stock that really is the stock for the future. I mean, I think here's the thing. Everybody, talks about, well, we have these unbanked people and all that stuff. And that's true. But you know what? With the internet and PayPal, you can have a bank account. So that's why it's such a significant stock. I mean, I've had a PayPal account for years, but you know, I used it for Amazon and eBay and kind of stuff like that. Like I've sold cars on eBay, and I've done PayPal, and I think it's great. But you don't even have to have a bank account. You just get a PayPal account. So if you're challenged, and who isn't? I mean, it's a great thing. So PayPal is just doing incredible business. I think in the near to long term, I think PayPal is a great hold, and right now it's hot. So I'm going to give a trade on PayPal a little bit after this that you might want to look at. Now, I'm not necessarily recommending it because this is really for, I got to say, for instructional purposes only. But you know what? It's a great way to make a little bit of money because I do think it's going to go up even more. So let's see if I have anything else. All right, PayPal skyrocket. Yeah, it's just incredible, Bobby. By the way, everybody knows Bobby on the talk. He's great. He always stops by, and he has had some great trades himself. And thanks, man. Yeah, PayPal is just moving nice. It's so nice when you're out in front of that. Hold or sell PayPal. That's a really good question. At this point, here's the thing. It depends on when you got into the stock. Here's the rule that I always like to do, and that is you want to get in. You want to get into you want to be in a stock. If it goes up 20%, that's when you want to be. That's when you want to be considering possibly selling your capital out. What do I mean by that? Well, let's say you bought a stock at $100 and it goes up. It goes up to 120. And you're like, wow, that's awesome. Sell part of your stock, take that gain, and then play with the house's money. I mean, that's really what I say. So it depends on where you buy it. I do think, once it's gapped up, be a little bit careful the next day of buying it because it usually nothing goes up in a straight line. It's going to readjust back down a little bit. But I think that, the upward pressure on PayPal is tremendous. And I think that, I think that we're going to see, just tremendous movement more. I mean, it could be $200 stock. Who knows? I think the fundamentals are there. So that's my advice on it. What I would do if I had the shares right now and you can afford it, and then again, even if if you can afford to sell calls, I would still buy this stock over a lot of other stocks because I do think it's going to go good. So if if your capital is like, let's say you only have a few $1,000s, well, take a look at doing a full position in PayPal. What do I mean by that? Well, let's say you have $10,000. There's 8 full positions in every portfolio. You don't want to short trade any more than that because it's difficult. So there's one full position is going to be about 10 or 12 shares. So even if it's only 10 or 12 shares, you're going to still get the advantage of a quality stock like PayPal. What's happening in the market is that the big tech stocks are getting all the love, and it's awesome. So if you're in them, it's a great thing. I mean, you can do all kinds of stuff if you're in them. So that's what I'm saying is you want to be in this stock. Now, the next big stock I think to pop, to be honest with you, is Facebook. I mean, it's sort of like a broken record. Facebook, because it goes up and it goes down. But here's the thing about the stay-home economy. Well, Facebook is the biggest social media platform pure play there is. I mean, it's just huge. And it's huge. So people to reach people, the advertisers that are out there that are advertising are going to Facebook. So I think this is a really good one. And when I took this slide this morning, it was at 210, and that was up from 2. Up. Look at this, up almost $8, 4.4% just in one day. Now, is it going to continue up like this? Who knows? But here's the thing. Look at this chart. This is the weekly chart. You see that? You see, it's going to move, and once it moves above this line, this 224.30. That's why I have it up on the screen. Once it moves above that, it's probably going to go higher, because here's the thing about the way it works. I mean, what's going to happen is eventually it's going to kick in where, we're going to have all this unemployment and people aren't going to have, anything, any work. And that's going to be bad for a lot of stocks. I mean, a lot of stocks are just going to get hammered. The cruise lines are going to get hammered. The retailers are going to get hammered. But Facebook, Microsoft, Google, these stocks, well, they don't depend on that. And that's where all the cash capital is going. So just like anything else, you want to be where the capital is moving. Now, I have a really good question here from Market Trader, which I think is excellent. And and again, this is a tough market, because basically Market Trader is out there saying, look, I mean, I think I have, is this going to be a V-shaped recovery? Well, I don't know, but I know that at least in the short term, it's looking to go higher. Now, I wouldn't want to be out more than about 2 weeks. That's why whenever I'm buying anything right now, I'm immediately selling a covered call on it because I want that protection. But it's an amazing thing to see. It really is. It's just amazing. So at least for right now, I'm in the market. Now, will that change? Probably. I mean, it usually does. I try to cycle in and out of the market on a weekly basis, and I keep score on a weekly basis. And that's something that you might want to get in a habit of doing. Looking to buy things that are in very good chart patterns, and then if there's a move up, then if you had got a nice 20% gain, then selling out. So that's what I've been doing, and it seems to be working. So at least for right now. I mean, it's so hard to say, but I think things are going to change. I know things are going to change, but I don't know when. At least right now, they're going up. What moving averages do you use for your chart? Well, I use basically two moving averages on my chart. And I have the Facebook chart up here right now. And the charts that I look at the most are the weekly charts, okay? I just want to show you that. It's the weekly chart. And the weekly chart, the reason I look at the weekly chart is because that's going to show you where the buy points are. Once you get adept at reading these charts, it's really not that hard. It just takes a little bit of time, and you're going to see the patterns. Now, as you can see, there's a deep V here, and the bottom of this red line here, this was on March 23rd. This was when the low of the market was put in. And at least on the spider, this is not the spider. I'm showing you the Facebook chart here, but this was the low of the market, and it's been moving steadily higher. Why? Because there's been tremendous amount of money that's been pumped into the system. I don't know why. I don't make Fed policy, but that seems to be working, at least for right now. Now that it may run out, we may have hyperinflation, but at least for right now, money's coming into the market. You see this red line? This red line is the 40-day moving average, and the black line that you see here, that's the 200-day moving average. Now you see where these cross here? You notice how that lines up pretty much with the low of the market? Whenever you get the 40-day moving average crossing the 200-day moving average, typically you will see a reversal on the trend. And that's exactly what we've seen here. So there you go. There's a reversal on the trend. There's a reversal on trend. Sometimes it's not as deep. For instance, the 40-day moving average moved above the 200-day moving average back in March of 2019, and as you can see, it carried it forward. It wasn't as much of a reversal as you can see. It was just kind of moving along here, and then boom, there was a reversal, and then it started to move up. But typically when these lines cross, when the 40-day moves either above or below the 200-day, that means that there's general support or resistance for the move on that stock. So this is why these are the lines that I like to look at. Now, another important thing to look at is the volume. Now, you really can't see this if you look at a daily chart because it's going to be up and down on the daily chart, but the weekly chart is going to show you if there is an increasing volume, and indeed there is on Facebook. Look at that. It's got an increasing volume. And the blues are the volume is up, and the reds are the volume is down. So that shows you increasing volume. So that's very, very bullish, believe it or not. I mean, here we are, and I've been trying to figure out which way the market direction is going. Sometimes it's very hard to read it, but this, by looking at these lines, it allows you to see this this kind of movement. So anyways, that's kind of how I do the chart lines, and there's a lot of other things I'd like to show you as well. Let's see, what is Dallas trading for? Well, it's basically, I'm an independent trader, and I work with other independent traders, and we trade stocks and options here in Dallas. And I have this little kind of as an experiment, I started to live stream on TikTok. I couldn't believe how much good response I got. So I put it on YouTube, and now I'm on Periscope, and I'm even thinking about putting together a Roku channel. It's just kind of growing organically. I mean, this is sort of the what I do every morning. I look at the charts, I kind of see what the trades are, and then I set them up, and I said, well, why not just put it on the air and see what happens? That's Dallas Trading Floor, really. It's really simple. I mean, I don't these are all just ideas. This is, there's no charge for any of this thing. I just want people to be successful like I've been able to be in the market. And I think, hopefully if that happens, people will find me. And, the social media is an amazing thing. I mean, if you're offering something that of value, it sometimes is a viral thing. Now, I wanted to show you. I wanted to show you an interesting trade that you might be able to make on PayPal. This is going forward, and let me see if I can move around the there we go. Let me see if I can hide that. And so take that away. There we go. Hide that. This is a trade that I think that you might be interested in making. It basically is this. This will give you a return. I've calculated about $794 in 22 days. It's a 22-day trade. It's not, it's a better than a break even. That's really what I look for. So here's how it works. Here's how the trade on PayPal works. You buy 100 shares of PayPal, and you don't have to necessarily have all of the assets in your account. You can actually buy this if you have a margin account, or if you have cash in the account, you can do that as well. Now, unfortunately for this play, you have to have 100 shares, and the reason for that is because this is a covered call, and each contract represents 100 shares. So As of this morning, you could buy PayPal for $145.46, which would be your out-of-pocket expense would be about 14,546. I know that sounds scary, but don't just bear with me here, because we're not spending the money, because we're going to get it back. Okay. So then the next step is you sell a call option. This call option allows people that buy this call option to buy the 100 shares from you at a set price. The strike price that we want to have on this particular call option is a $150 $150. And I didn't put that properly when I typed this up. That's a $150 strike price. Well, what that means is we're buying the shares for $145, and then we have signed over a contract that says that we will, if somebody pays us $150 up until May 29th, we will sell them those 100 shares for $150. So we and then what we do is, after we sell this into the market, we then set a stop loss on the underlying shares. And my stop losses are always 7% below what I paid for them. Why? Because this is an optimal point in terms of recovery from any bad trade. All right. So a 7% stop loss will give us a price of $135.27. This is the amount. If everything goes wrong, this is what we will get back. Because what will happen is, if the stock falls, and I hope it won't, I don't think it will, because it's gapped up. That's a very, very auspicious sign for a stock. But if it does, if it goes down, then we get back 135.27 of our shares. So the option profit in this particular example is $340, then an upside of $454, for a total of $794. Now, the maximum loss that we can have in this is $679. And how do I get that? Well, that's the if the stock goes down, nobody's going to want to buy it for the $150 strike price. So that's going to expire worthless, and the stop loss will stop us out. We'll sell the stock at $135.27. So the maximum loss on this is $697. So we're gonna take a $679 gamble to make $794. But remember, if we're selling options, typically we have a 70% chance of being right. So this is actually, if you do these kind of bets over and over again, believe me, you will generate a very nice income. I've done this for years. So anyways, let me see if I have another. Let's see. There we go. Let me just show. Let me show the comment here. Hopefully, I can get it up here. So what happens if nobody buys the contract? Well, the way it works is you offer the contract for sale, and basically you can there is a control that allows you to sell it at market. So anybody that's bidding on that will buy your call at whatever the market is. Now you can do it that way, or you can put a limit order in. But believe me, in the market, you can immediately sell this. You can sell this option literally in a minute or two, just by going to the market. So that's how that's sort of how it works. Hey Earl, I appreciate this one too. Let me see if I can put this one up on the screen just so everybody that's seeing it. I'm not sure you're seeing this on the screen, but basically Earl's saying a vertical bull spread can be used as well. Absolutely. The vertical bull spread is also excellent. If you don't have the capital to purchase 100 shares, absolutely. And basically what this does is, and I will show this probably tomorrow, this uses options in case you don't want to purchase the underlying stock. But the reason I'm showing you the covered call is because that's a good way to kind of get an idea of how it works. But the great thing about these spreads is that you can replace the underlying stock with another call option. That's exactly what I did on Disney. I wasn't sure if it was going to go up or down. Now, it's had its difficulties because I thought, well, gosh, they're going to have bad earnings, and sure enough, they did. So I didn't want to invest my capital in the share. So what I did is I purchased is I sold 10 contracts, 10 101s, and then I sold 10 101s, and then I bought 10 102s for expiration tomorrow. What happened was that there's a spread, and that spread is the amount that I put into my account. Now, if the stock moves, if the stock closes on Friday below 101, well, I just keep the difference. If it closes above 102, then I have to buy the shares to cover my my short position, but I also have an option to buy those shares at 102. So I can possibly lose in that position, but I'm limited. I'm limited to the spread between the two strikes, 101 and 102. Maximum loss is going to be 1,000, but remember, I'm collecting $470. So, I've limited that loss. And if it closes above 102, I win. And if it closes below 101, I win. Very interesting. It's amazing. You do these at earnings time, and I'll show you one of these tomorrow. This is like a steady stream of income. You can do this every time and make a little bit of money. Now, are you going to win every time? No, but you're going to win 70 to 80% of the time. You really are, and it's absolutely amazing. You can really, really do well on that. So, this is a question that I have here. Hopefully, this will come up on the screen. Goodness gracious! And I'm showing it, and hopefully it'll come up. Let's see. if I can, yeah. If tech is doing well, would the QQQ generally buy be a good plan? Well, yes, actually, that's not a bad idea because the QQQ represents the NASDAQ 100. These are the 100 largest stocks that are in the NASDAQ. So this represents the bulk of the value of the NASDAQ. So it has good stocks in there like Microsoft and Apple and Facebook, and those are in there, but there are also some other ones that are coming up. Roku's in there, PayPal's in there. So a lot of great stocks. So if you don't want to pick individual stocks, the Qs are a great is a set and forget way to go. You know, you can buy the Qs, you can set your stop loss, and interestingly enough, if you think the market is going to go down, and this is what I do when the market started to move against, in March when the market started to move down, what I did was I actually shorted the uh, the SPY because I knew the whole market was going down. I didn't know where it was going to go down, so I shorted the whole thing, and that worked out very well. So there's a lot of things you can do, and the Qs are a great way to play tech. So I just want to put that out there. I've been listening to some. Oh, wait a minute. Oh heck, I think I have a technical issue. Jim, I love listening to some technical issues upbringings. I apologize. I'm going to try to get this. I know that I have a bandwidth constraint, and I apologize for this. Hopefully, when I upload, I'm going to upload this to Vimeo, and so if you could go on my list, hopefully that will be a better recording of this. And again, I so apologize. I'm going to see if I can improve my miking on this. So I apologize that my sound quality isn't that good. All right. On Market Trader, yes, in this play, Microsoft on PayPal, $1,400 is locked up. That is true, but we can do a bull call spread where we don't have that locked up. So that's another way to do it. The reason I show this covered call is because it's the most conservative options play that you can make. It's the most conservative options play that you can make, and to benefit from the potential. This is a moderately bullish trade, meaning that I believe because of this gap up that PayPal is likely to move higher. It's a bullish trade. So there are bearish trades and there are bullish trades. The most conservative bullish trade on options is the covered call. But if you don't have the 1400, totally understand. You can do a call spread. And that is where you, at the time that you're issuing it, you buy 10 contracts, you sell 10 contracts of the strike price right below where where the stock is trading. So, for instance, if the stock is trading, if the stock is trading at 145.46, you want to sell the 145 contract and you want to buy the 146 contract. But you want to make sure that you buy and sell them on the same expiration date. So an expiration date on this is May 15th. Well, on May 15th, you're gonna have it. You're gonna sell them for a little bit more than you're gonna buy them for. That spread goes into your account immediately. Now, if PayPal closes below the 145 that you've contracted for, you keep the difference between the two strike prices. Okay. Now, if it closes above 146, that's where you bought the contracts. You get the difference between the contract and wherever it closes. Now there is a portion that you will lose money, and that's if it closes between about 145 and 145.50, because remember, you got a premium for your for the money that for the contracts that you sold, and 146. I know this is kind of complicated, but this is how it works. So in that zone, you will lose a little bit of money, but you've limited your losses to $1,000 because that's a spread for 10 contracts between 145 and 146. So I will show you this in more detail, hopefully tomorrow. I really appreciate you putting it out there, because hopefully I can explain that. I'm still long on FNV. I agree with you, by the way. This is another one of my favorites. Here's the thing about the gold sector, and I want to talk on this, Earl. I really like this comment. I'm very bullish in the midterm on gold. Now, I know when it moves up like this on the Qs, you see gold sometimes doesn't do quite as well, but I am very bullish on it, because I do think that when all this money from the stimulus comes back into the economy, it will create inflation. As a matter of fact, I'm already seeing it. When you go to the grocery store now, you can see that the price of meat is going up, right? That's inflation. Now, the price of oil isn't going up because nobody's driving, but the price of meat's going up. And I think that other things are going to go up too. So gold is a hedge against inflation, not against deflation, which we are in currently. I know this is confusing, but right now we're in a deflationary period because there's lack of demand. But because of all the stimulus that's coming into the market, it's going to create a inflation. But that inflation probably won't hit until the end of the summer, because that's when the capital will come into the market. All these payments will have to go somewhere. Now, it's going to be a very weird time because there's going to be a lot of people, unfortunately, that are unemployed, and that's terrible. But there will be people that have money based from the stimulus, and that money will go primarily into assets. For instance, the assets being the stock market, potentially real estate, but I don't think as much. I think it's going to go most of the stock market. That's one of the reasons I believe that we're seeing such increases in the tech stocks, because that money from the stimulus, it's going somewhere. People are saying, well, gosh, I can't make money on a hotel because nobody's staying in a hotel, but I can make money on Microsoft. So that's why it's pushing the price higher. That's just said. So I do think we're going to get some inflation, and that's one of the reasons why Franklin, Nevada, and KL, these are both gold stocks, typically are good bets. Now, are they going to make money right now? Maybe. But I think in the midterm, we're going to have some inflation. I think gold is going to move up. And if they do, these stocks will do very well. So thank you for the question. I so appreciate it. When we have some data, does the buy and sell contract execute the same amendment after the market goes? Absolutely, it does. Absolutely. This is another question. Let me see if I can put this up on the screen. I can show this. I don't know if this is showing because I'm having bandwidth issues, unfortunately. But it does. It what happens is the way these contracts are settled is that at the end of the time when the stock expires, it always expires on a Friday. And then on Saturday, all of the accounts are then settled. And when on Saturday, it's going to settle at the strike price if the stock closed above the strike price. So the call is going to be settled at that time. And if the strike price wasn't exceeded, if it was below that when it closed, then the option won't have been exercised. It will have in the what they call it will have expired worthless. So that's how it works. It's always done on Saturday. So here we go. Let's see. PayPal. What would be a new buy point? That's a good question on PayPal. Let me go see if I can move back to that PayPal. I can move back to PayPal on the charts. I'm moving back right now. Hopefully this will show PayPal. There we go. Okay. Well, I think that really the buy point really for PayPal, the way I see it, was about 130, 131, right in there. You can see at this top line. Now, what's going to happen? Well, this is a gap up. Okay. Now, why did PayPal gap up? Why do stocks gap up? The reason stocks gap